Hi guys, how are you? Welcome back. It's been a while since I made a video. Let's do another one here. And I'm not sure if I can show you multiple tabs. So I'm kind of flipping back and forth here. But I don't think it is working, but we will see on the next video. Anyway, let's get started. Um, I want to show you some of my trade ideas. And remember, trade ideas are not black and white. They're not, well, it's going up, well, it's going down. No, because it really depends on your portfolio, your risk tolerance, how much cash you have laying around, how much exposure you have to the market. What is the composition of your entire portfolio? There are many different people out there with different needs for their portfolio. Okay. Some just want to know what the expectations are on their holdings. Some want to know, where the key areas to buy are. Some, they want to take high risk trades and, you know, they know how to do it properly with, proper risk management and they take them. Some don't, some are just learning. There's so many different people out there. So when I get comments and it's like, well, I disagree with this, it's like, dude, it's not about your agreement. It has nothing to do with that. If you disagree, great, fine, don't move on. There's no need for you to think that everybody else thinks like you. So that's important. That's important to keep in mind when you look at my charts. My charts are for many different people, and believe me, I don't take every single chart that I post. I don't take the trade. Uh, I would have to have I don't know, a huge mutual fund that I'm running with billions of dollars. But it's a diary of sorts. It's a diary of what I see in the markets, what's going on, where the money is flowing into, what is the macroeconomic backdrop telling us based on what the market is doing. Clearly, you can see that deficits boost up asset prices, right? That's where the inflation is taking place. It's not taking place in the real economy. It's taking place in the asset bubble, stocks, bonds, commodities, real estate. Okay, that's where it is. Okay, so within that realm, where is money flowing into? Right? Is it flowing into high risk assets, or is it value? Right? Right now, value is in vogue. Clearly, you look at you look at all the meme stocks. They were the last to go up, right? They exploded higher. Everybody thought, oh, we're gonna kill the man. Let's buy the game or whatever, AMC, and we're gonna beat the man. They all ran in, made a lot of money. Then, it tanked on them, right? It tanked on them, and if you stay and stick to cute stories, you're gonna get hurt eventually. Um, but anyway, let's move on from that. So you had the really high risk, and then you went from high risk to value. Value like McDonald's, Lockheed Martin, UPS, FedEx. You start seeing money flowing into that sector, right? The value, and banks are considered value, by the way. Okay. So they started to go up, and then inflation is coming. It's like inflation, really? Where? And the type of inflation that they're talking about, because remember, inflation is a multifaceted word. The type of inflation they were talking about was in the productive economy, right? The only inflation you will get in the productive economy is going to be in real estate, okay, because there's such low supply, historically low supply, and you're going to get it in commodities, okay, relative to where they were, right? So relative to the lows, you are getting commodity inflation. Now, when you look at commodities overall, okay, they're breaking out. A lot of them are breaking out. And, some of them are due to expectations of Green New Deal. Some of them are because there's too much excessive deficits. Okay. Some of them is because people think that, the money supply is what creates inflation, which is not. It does create inflation in asset prices, but not necessarily in the productive economy. Okay. Other people say, oh, it's a supply chain, it's broken, there's so many different ways that people think about these things and why they trade them, and you can get, you know, hundreds of different ideas and points of views and cute stories and analysis, and but in the end of the day, it comes out on the chart. Now, the thing about the charts are that price is what you pay, value is what you get. So you know, it does it justify that stock prices are as high as they are today? In one sense, no. It has nothing, completely disconnected for the economy. Well, then the stocks are not like economy. Well, don't think of it like that. Don't think of it like that because ultimately you have to increase your revenues, increase your profits, right? Earnings per share. You have to do that for stocks. Now, I understand that 30% of stocks in the market right now don't even make money. Well, someday they'll make money. Well, that's not good enough. You can't keep doing that forever. Um, Eventually, reality hits, and when it does hit, the law of diminishing return kicks in, and everything goes to shit. So, um, you know, again, you have to look at everything from many different angles. You have to look at what price is doing. You have to see where the risks are, where the rewards are. You can't guess. Well, earnings is coming out. So what? What does that mean? I don't know what that means. No, but earnings, and then they equate earnings to, let's say, bullish stocks to something bullish happening because earnings is coming out. No, don't do that. That's a mistake. You can't make these kind of assumptions. You're guessing. Stop guessing. Guessing is for losers because eventually you're going to figure out after you blow a couple of accounts, like I did, that guessing is not going to get you anywhere. Cute stories are not going to get you anywhere. Um, you have to have a good understanding of macroeconomics, the monetary system, how charts work, and a lot of these charts, you have to keep them simple. You have to keep them as simple as possible, right? Because if you don't, you're going to confuse yourself, and you're always going to find what you want to find in the chart, right? You're going to find, oh, these 10 indicators are signaling a buy, and these 10 indicators are signaling uh, a sell, so I'm going to go with the buy, or I'm going to go with the sell. You can convince yourself of anything, and to teach that is almost impossible to anybody. The only way you can learn that is by figuring it out yourself. So, um, that you have to be as objective as you possibly can, and it's not easy, especially in this day and age, especially with so much overload of data and indicators and this and that. It's again very, very difficult to teach that to anybody. You have to figure it out for yourself. I'm just here to let you know all about it. All right, so let's go through the charts. IPO. All right, so clearly IPO broke down. If you go back in time, you'll see that I said IPO was getting tired. Hopefully, we'll get to that in this video. But it's broken down. It's in a bear flag. Okay, here's the thrust down move. Here's a sideways action. Look for one more down. Okay, what is the risk? The risk is it pops up a little bit above. Okay, get out. Get out. For those people that want to take this trade, if it pops above the previous highs, you get out because it's likely going higher. Fair enough. If it doesn't, well, it goes lower. Where can it stop? Well, it can stop at 60. It can stop at 57. Right. So again, what for other people? What is your expectation for these IPO stocks? Well, they're probably in some kind of consolidation, going sideways in this range in here, but about 10% range if you measure it. So which way is it going to go? I don't know. I have no clue. I don't care. I'm just showing you what the setup is. All right. You look at sugar. Sugar is sweet. Why? Because I talked about this, that commodities are hot. Why? For many different reasons. You're seeing that in this long term chart, going back to 2011, when it peaked, that you had a nice wave, 1, 2, 3 wave down. You had a structure. It's wedgy looking. It popped out a little bit, came back, you know, now trying to go back up again. If this succeeds in breaking out, then you're going to see sugar go much higher. So, again, am I telling you to go out and buy or short or do whatever? No, I'm not telling you anything. I'm telling you what the setup is. I'm telling you that, this is part of the commodity sector and commodities are hot right now. So, take it for what it's worth. If it fits your portfolio, great. If it doesn't, It doesn't. No big deal. Okay. The more time that it spends at the top of the structure, the more likely it is that it's going to break to the upside. And again, something that a lot of people don't know. So that's why again I posted that. Tesla. I get a lot of comments about Tesla. Well, let's go back in time first of all. The first chart I gave on Tesla was a ratio between Tesla and NDX. Tesla has clearly been outperforming NDX since 2018, I think. At the bottom, let me see if I don't know if you guys can see this. Um, Again, I'm not really sure how this because I'm using the desktop and the video, so I'm not sure if you can see it. But anyway, I think it was back in 2000. I can't even see it. But anyway, there was a nice long up move up. Right? It's gray. The upper line is gray because the move is not validated. There's not a hook here to the downside to validate it, but it is getting tired. That was the first one that I posted, I guess, back in December. And then in February 22nd, I said, well, look at this. 900, 850 was my target, but 900 flattened out. Okay. Flat tops equals market drops. And then the wedge started to give way. And sure enough, that started to unfold to the downside. Okay. Fair enough. Again, this is like a diary. Okay. That's how you should look at these posts. So you look at it today and you popped up. By the way, here's the other one. I don't know if it's going to show it or not. I think the desktop still has some limitations to it. Anyway, let's skip it. Anyway, so you have a nice 1, 2, 3 up. It's kind of tight. It broke out clearly. Okay, that's bullish. So as long as price remains within this little structure, it's bullish. It's very clear. Okay. If on the other hand, it starts to build pressure, okay, at the bottom of the structure, the likelihood that it's going to break increases. And that's why I posted this that look for another move down. How deep? Well, it could probably test either the 540 area, which was the recent low, or the more recent low, which is about 592. Right? It doesn't mean that it's not bullish. It doesn't mean that it's going to collapse. It doesn't mean anything. I'm just telling you that this setup, completed 1, 2, 3 structure with 4 points, is looking bearish for the near future. All right, that's the point of that. Space. I told you space to short it. All right, double top came down about it's what 63% or something from the highs or whatever. And prior to um, uh, breaking this structure, this recent, let's call it a liquidity break for now, broke down out of structure. All right, I gave you the buy area. Where is the likely buy area? Somewhere in here. And sure enough, okay, a couple of days later, just kind of a week later, whatever it was, because remember, these are the posts I initially showed you, the double top, all right, and that collapsed, and then I showed you prior to this drop recently that here's the buy area, here's where we are today within this buy area. Okay, now it broke the structure. Now crossing of the line for me is not a big deal unless it forms some kind of structure and then holds below this support area and then starts to fade away. Okay, that to me is more important. The crossing of the line happens all the time, uh, but we're still in the buy area. Okay, so if you shorted up here, like I initially showed you at $52.90, you made your money. Now you want to say, well, I want to have some risk in my portfolio. I want to have a high risk stock, and I like space for whatever reason. Well, here's the setup. Here's the buy area. Now, having said that, the next support is all the way down here at $15. So if you're going to be a long-term holder of space, then you have to have a strategy that you will be able to accept something of a $8 drop. All right. So I tried again to to be as encompassing to everybody as possible. All right. Uh, some people were bitching at me. Oh, you hate the meme stocks. Oh, I don't hate anything. I don't care. I'm just telling you what the charts are saying. All right. And I'm using some other analysis as well, and economics and money flows and where the market is and so forth. But in the end of the day, I'm all that is incorporated in what I post. Okay, so I'm taking everything into consideration as best as I can. All right, you can always come up with an argument that's the opposite. That doesn't make it a valid argument. Okay, let's move on to Amazon. Okay, it's not ready yet. Another one. Oh, Amazon lovers. Oh, this is wrong. You're wrong. Blah, blah, earnings is coming. Look, um, as and I show you here clearly that as price moves to the upside, okay, look for one more down. Why? Because if you go back in time, corrective actions in Amazon seem to take a long time and they go sideways. And that's a consolidation. That's a bullish formation. It's not bearish. It's the same thing here. Just because I'm calling for another move down doesn't necessarily mean that this is bearish. Go out and short Amazon because it's over. It's not what it means. It just means that expect some more sideways action within this large range. This range is about 20%. Okay. It happened before. And that's what technical analysis is about, right? Repetitive moves. So you see the Nasdaq is at testing previous highs. It's doing a head test right now. You see that Amazon is not really doing what it's supposed to, right? The normal kind of breakout moves. You see it's in consolidation. You see the structure, and if you look at structures long enough, you start to get a feel for them. Um, and you're saying, okay, well, I know a lot of people are bullish about this, and to me, this is what it looks like. It looks like a little bit more up, and then you're going to get one more down, hit support at 13 years, and then it's going to probably blast off from there. Okay, so somebody that has an expectation that it's going to, take off tomorrow, well, let me tame them a little bit. For somebody who's a sniper, who's a short, right? Who understands what I'm showing, who has the experience. Shorts are elite crowds. Not everybody should be shorting. Who understands what I'm saying and knows how to manage the risk, they can take the short when it's appropriate. For other people, it's setting their expectations. Again, there's many different reasons. But anyway, again, that's the point of the charts to satisfy everybody and tell them what I, based on my experience and the way I chart, what it looks like to me. All right. And one more VIX. Okay. This is at some point going to pop. I think we all know that. It is going to pop again. There's going to be some kind of news that's going to make it pop. There's a lot of bullishness out there. So be careful. Be careful. I know for a lot of you guys who are, new to this, and you think that the market goes up only, in one direction every single day, eventually you're going to find out that's not the case. And I don't want to say you're lucky, but with all the Fed intervention, there's a little bit of luck involved, and you think that there's skill, but eventually you're going to figure that out because you need a lot more experience and training to really be able to understand. And sometimes that experience and trainings will keep you from some trades, but it's also, of making money, but it's also going to keep you from taking huge losses. All right. So that's it for this video. I won't go too much into it. All right. Look at the put call ratio. I don't look at these things, but it is at an extreme. Okay. Extreme euphoria out there. Extreme euphoria. This is, it's one of the signs of a bubble. All right. And that correction eventually will come. Will it? Who knows? Anyway, that's it. Thank you for subscribing and following. I'll talk to you guys soon. Take care and bye bye.